Hi, this is the third in a series of videos where I analyze Nano Dimension Limited, ticker symbol NNDM. If you're watching this video, you probably already have an idea that Nano Dimension is an Israeli company in the nanotechnology sector, and its shares trade as American Depository Receipts on NASDAQ. For full disclosure, I own one share of NNDM in my Roth IRA. I bought it for just over $7 a share a little over a year ago, and soon after I bought it, it had nearly doubled. Obviously, in hindsight, I should have sold it, but I held on. As of the close of yesterday, the price was under $4. Certainly, I have an incentive for it to go up so that I can sell it at a profit, but I don't see that anytime soon. But I want to establish this channel as one that gives good advice with integrity, and I'm not going to diminish that to try to make back a loss of $3 on one share of stock. In the last couple days, there have been two factors which have affected the stock. One, a few days ago, it was announced that the CEO is buying $500,000 worth of stock on the open market. That seemed to have caused the price to go up slightly the day after that was announced. Yesterday, the stock was down, but so was everything in the stock market. In fact, for some companies, yesterday was a bloodbath. Amazon, Tesla, and Nvidia were hit hard in particular. But despite those two events, I think for this stock, while the sector may be a good one going forward, I do not know if this company is the right one to make money for the investor anytime soon. The whole point of investing in the stock market is to try to make money. It doesn't matter who it is, whether it's you or me or some other guy, but we fall in love with companies. We fall in love with entrepreneurs who start companies and who are mavericks and iconoclasts. But that is our heart and not our brain thinking. When investing, we need to invest primarily in the fundamentals of the company, in the financials of the company. Is the company making a profit? How sustainable is it? How fast are revenues growing? Is the company in a growing industry or a dying industry? How has the stock done in the past? You know, they say that past performance is no guarantee of future performance. It's true that it's not a guarantee of future performance, but it is a potentially logical indication of future performance. So in my previous two videos, I discussed the long-term decline in the share price of the company. I got a comment posted on one of the videos criticizing my analysis and pointing out that the stock had split. I think the commenter was under the belief that because the stock had split, my numbers somehow did not take that into account. But the numbers that I used were from Yahoo Finance, which is the same as any service that provides stock quotes. It is true when the shares were listed in, say, March 2016, the price was probably $6.90, not $69. But I think that some people, knowing that there was a stock split, but not completely understanding how it worked, might think that the shares were $6.90 and now they're worth just under $4, so a loss of about $3 a share. This is not correct. When reverse splits happen, which is what happened here, the financial sites will correct the chart so that the price line will follow one unit of stock over the whole history of the chart. So if you look at a 5-year chart, you'll see that $69 worth of stock in 2016 is currently worth just under $4 at the end of 2021. So you might say, okay, I understand it has lost approximately 95% of its value with an average annual total return of negative 38.42% with no dividends paid out, but maybe it's at the bottom and its future will be bright and it will start going up. And certainly this may be true. I can't predict the future, and I certainly can't say that you are necessarily wrong. But here are a couple things to keep in mind. One, mutual funds generally cannot invest in shares which are valued at less than $5 a share. Two, generally exchanges have a requirement that shares can be delisted if the price falls below $1 a share for a certain number of days. Three, NNDM already executed a reverse split where for every 10 shares that you owned, you got one new share. This normally would cause the value of the new share to be, in this case, about 10 times the value that it had had been before the split. Generally, companies do this when they're losing money and their stock is going down. This can lead to a couple problems. One of them is that if you do not have an even number of shares relative to the ratio being exchanged, then instead of getting shares, you'll get paid whatever the value of the potential share being traded on the stock market. For example, if you have 11 shares that you bought originally and there is a 10-for-1 reverse split, 10 of your shares will turn into one new share, and that other old share you'll get paid for. And if you believe that the stock is going to go up in the future because the business prospects improve, you won't be able to make back your money necessarily because you have cash rather than stock, at least for what would have been a partial share. Another example would be if you only own 9 shares and there was a 10-for-1 reverse split, then you wouldn't get any new shares. You would just be paid for the value of your 9 shares on the day that the split occurred. Another downside, which I've encountered at TD Ameritrade, where I have my accounts, and this is true for some but not all brokerages, is there is a reorganization fee that can be levied when there are reverse splits. This doesn't happen when there are regular splits, but in the case of my brokerage, I'm charged $38 if there is a reverse split. Quite frankly, with NNDM at such a low price, without any indications that their financial prospects will improve anytime soon, I think that it is very likely that they may enact another reverse split. So please keep that in mind. By the way, I've only been creating these videos for the past month, and I'm tickled and honored anytime that anyone leaves a comment, even if they might be erroneously criticizing my work. And no one on the internet is infallible, including myself. If you see something that I've missed, please by all means point it out. I've stated in previous videos that I thought that it's very likely that we may be at the top of a market cycle, but I'm also bullish on the long-term prospects of the American stock markets. If you currently own Nano Dimension, you might think about exiting it. The money would be better invested in a company that is making money. Meta, or Facebook as most people know it, or Nvidia would be far safer high-tech bets than NNDM. Thanks for watching. I really appreciate your time. It would greatly help me if you would subscribe to my channel. Also like my videos, and I would be honored if you left comments of your own in them. When I'm not losing my shirt in the stock market, I sell small collectibles, including obsolete stock and bond certificates, on eBay. If such things are of interest to you, I invite you to look at my inventory. You can see me there using my username, which is stock_tycoon. I'm on Instagram at Anthony RR Mills. Thank you.